what did the generation above you build? Just what did your grandparents leave? What was left of it? What still remains today? Honest answer is not much. I think that's pretty normal. B, go a layer deeper and just kind of ask yourself why. And it's not because they didn't work hard. It's because nobody showed them a system. But you're here, which means that you know now. And knowing and doing nothing, that's a choice in itself. And Nelson talks about a story where grandparents start policies on their newborn grandchildren. He talks about one son having 2 kids and another child having 2 kids and putting policies on all 4 of the grandkids equally. And the concept under the story is what I want you to hear, because it's really the same that you hear in any kind of wealth building. It's really about starting a policy early on a child. You're planting a tree, and the tree's growing every single year, and it's guaranteed. Welcome back to another episode of WealthWise Banking. I'm your host this week, Jason Sipple, because my co-host, who is off winning awards, wrestling leprechauns, and maybe drinking a NA Guinness over in Ireland right now, is off just, like I said, wrestling, looking for pots of gold, wrestling leprechauns, and just having a great time, taking some well-deserved time off. And I'm here to talk about something that's near and dear to both of our hearts. We're going to talk about this question. What would your life look like right now if your grandparents had built a financial system for you before you were born? Not left you money, but instead built you a system. This is one of the most talked about things in my conversations. And this is exactly what Nelson Nash talks about in pages 71 and 72 of Becoming Your Own Banker. And we're going to go through this. And here's something that nobody told me or shared with me as I was growing up. Nobody ever told me that every car loan that I took out was making someone else's family wealthy. Not mine, but theirs. Nobody told me when I bought my first house and I thought, I was buying into the American dream that I was so proud of at 30 years old. But that 30-year mortgage, the foundation of my family's financial life, meant that I was going to pay 2 to 3 houses back to the bank before I actually owned anything. And nobody ever told me that when I deposited my money in a bank and my paycheck went in there every 2 weeks or every month, that I was earning pennies on the dollar. And at the same time, the bank is using that money to make 6, 18, 12, 24% or more. In every case, my money working harder for someone else and earning interest while I was out working for the money. Does this sound familiar? And by the time I figured this out, I was 46. I've said this before, but I thought just showing up first, leaving last, working harder was the plan. Like that was the method. That was how my life was going to live. I watched my dad do several different things, and he set a great example for me. But that's all I knew about money. And by the time I finally figured this out, by the time that I asked for help and I was handed this book and I read this section, resonated and it blew my mind. And when I asked myself, how much did this cost my family for the first 46 years? Not going forward, but already in the past. And the only thing that's worse than knowing that number is leaving it exactly the same for your kids or future generations in your family. And that's why these 2 pages matter. And that's why last week's payroll conversation about how we can keep more money in our family, for all of our builders listening, this is why this matters. And that's what I'm about to show you is the most important thing that I've read about building something that actually lasts. And when we flip open the book, right, when I open this book to page 71, and you start reading a story about a forest. And stay with me. And by the way, this is kind of ironic, but my father, I don't even think Jeremy knows this, but my father was actually a forestry major, graduated from Paul Smith College. Super small, up there in the near Lake Placid, Saranac Lake, New York. And when I read this is why I think it connected deeper than maybe it would have if I didn't have that history of spending so much time with my dad asking me what kind of trees these were as we were having family Sunday fun day out in the woods a lot of the times. But when you start reading Nelson's book and you start reading about forestry and you start reading about how Nelson talks about a forest owner manages 4,000 acres, right? A lot of land. And that's divided into 40 plus compartments or 40 compartments, make it even. Every year you harvest one compartment and then you replant a compartment consistently year after year, right? Long-term thinking. And after 40 years, the forest has an even distribution of age classes. Young trees growing, middle trees maturing, old trees ready to harvest, all at the same time. You have a system over time, perpetual, self-generating. You're never clear cutting. You're never planting all 4,000 acres and just clearing it out. And Nash asks the question, the powerful question that started many of us down this path. What if your family's money worked like that? Because here's the pattern that most families actually follow today. Generation 1 builds, Generation 2 maintains, and Generation 3 spends. 0, and they start over. Clear cut, replant, wait another 40 years. You just keep doing the same thing over and over again because each generation is trying to build their own forest without ever sharing what happens from generation to generation if we work together. And Nelson shows us a different pattern. He shows us that every generation adds a compartment. Every generation harvests from the previous one planted, right? You plant an acorn and you harvest an oak tree. And the forest never stops because the system never stops. Think about your own family for a second. If you're not driving right now, maybe grab your notebook and what did the generation above you build? Just what did your grandparents leave? What was left of it? What still remains today? And if the honest answer is not much, A, I think that's pretty normal. But B, go a layer deeper and just kind of ask yourself why. And it's not because they didn't work hard. It's because nobody showed them a system. But you're here, which means that you know now. And knowing and doing nothing, that's a choice in itself. And Nelson talks about a story where grandparents start policies on their newborn grandchildren. He talks about, one son having 2 kids and another child having 2 kids and putting policies on all 4 of the grandkids equally. And the concept under the story is what I want you to hear, because it's really the same that you hear in any kind of wealth building. It's really about starting a policy early on a child. You're planting a tree, and the tree's growing every single year, and it's guaranteed, rain or shine, it's going to grow. Whether the market's up, the market's down, the compounding is never interrupted. It never stops growing. It actually gets better every single day. And here's what makes it different from anything else that you've ever been shown. Even from last week's episode, you can still harvest the tree while it's still growing. Think about that. Last week, we talked about your kids earning real money through your business, legitimate work, legitimate pay, brain gigs, physical gigs, age-appropriate gigs, real value added to your business. And here's what goes next. Connor earns money making financial educational videos for our channel, and we pay him. He talks about mindset. He talks about money. He talks about the lessons, the things that he's doing. And it's imperfect because we want to hear his thinking. But now when he earns money, he buys extra paid up editions. That's how the money goes into his policy. And his policy grows. It grows in death benefit. It grows in high cash value. And it has the opportunity to earn more dividends. And earlier, a few months ago now, he was done building Legos. He wanted to build his first PC. And he went into our family banking system. We ran the loan calculator and we knew the interest rate on his policy. And he wrote out a proposal for me. And he told me how much he wanted to borrow. We put something together. We took the loan out and he bought the computer. He built the computer. The computer's functioning. He's actually on it right now. He was going to do this episode with me, but instead he's playing a little games before we spend some time together. And while that money is out funding his computer, teaching him how to build something with his own hands, the cash value has never stopped growing. That's the mechanism. When you take a policy loan, you've borrowed from the carrier's general fund against your cash value, not from your cash value. The cash value keeps earning a guaranteed rate plus dividend as if the loan never happened. The money's working twice. I like to actually think it's working 3 times. You're saving it uninterrupted. You're spending it to get the computer, and you're protecting the family. And it's for today's needs. And once the money's inside the policy, it continues to compound uninterrupted. And that's what the banks have been doing with our deposits, your deposits, for hundreds of years. All we're doing is mirroring their system and just a more efficient and a stronger financial tool, which is a mutually owned dividend paying company. And now, what the banks have been doing for hundreds of years, you're taking your money, they're paying almost nothing, they're lending it out at a profit, and the money's working twice, and both times it's for them. But now in our own system, right, the one we're talking about today, the money still works twice, but both times it's working for your family. And last week we talked about your kids learned to earn. This week they learn where it lives. And next, they're going to learn how to use it like a banker. And it's a 3-step sequence where we're going to earn, store, and deploy it, right? Or we're going to build, keep, and multiply it. They're going to earn through the business, they're going to store in the policy, and they're going to deploy it through a loan when a milestone or an opportunity shows up. Or as Jeremy and I like to say, we're going to have the guaranteed thing in life, which is, can you hear Jeremy's answer? Change. And that's going to be for urgencies, emergencies, or opportunities. That's not a financial concept. That's an operating system. That's a family operating system. That's actually doing the function of banking, which is the whole point in the conversation of, if you want to pass on and leave, your kids, your grandkids in a better position, it's more about the doing, which is about the communication, which means that you're closer to the thing. And so if we go back to page 71 and 72 in the book, Nash's forest owner didn't wait 40 years for the final harvest. Along the way, there's intermediate cuttings, right? Like every year, multiple times, like usually it was in a pattern of about 5 years, the smaller trees were cleared out intentionally. So the stronger ones, the ones that are going to be more profitable, could keep maturing. And real income was produced from those small cuttings while the main timber grows towards its full potential. That's a policy loan. It's an immediate cutting. It's an immediate need. And it can be buying an asset that creates even more income, right? Connor's PC was an immediate cutting. It was a value add to our life, not necessarily an asset, even though using it for video editing and other things, it is adding value to our family. It does align with what we're wanting to teach. But now he's paying it back. The forest continues to grow stronger. Another one you've heard me talk about, and this morning actually, I did my first bike ride. Don't tell my doctor because I haven't got approved yet to do this, but I went out and I did a 30-mile ride. So my hip replacement. Patty and I took a policy loan before the surgery, $21,000 out of pocket, right? We cut down some trees if you look at it that way. We had a better rate than any insured patient because we paid cash. The credit card gave us cash back. Private reinsurance reimbursed us. And we actually got the reimbursement check. And now I know how much I have to pay back to that policy loan. And I never interrupted the compounding. Not one day, not one moment, not 1 second. Immediate cutting, forest kept maturing. I talk about our other policy, our latest policy with Diego, with his future self, like with what he is doing. And once he starts earning, I'm building him a base, giving him that lot, if you will, the acreage, and he's going to add more seeds to it. He's going to add more trees to it. And that way, when he's ready, when he needs his first duplex, the house hack, or his for another car, there's intermediate cuttings from his own system that we control in our family, not out to someone else's bank. No application, no permission required. And every time any of us takes a loan and pays it back, the forest gets stronger. The compartments mature. The system keeps producing. And the final harvest, the death benefit, right? That's the 40-year harvest. Maybe it's an 80-year harvest. That's when the policy completes its cycle. And when you have the systems and processes in place for what we're talking about, for basically the Rockefeller method, that's what we're talking about today, that's what transfers to the next generation. It's not just the tax-free money. It's the system that's been implemented over time. It's the small cuttings. Because if Connor does what we're teaching him, when our policies complete their cycle, he already has his own forest growing. Hopefully by then, I'll get to meet my grandkids or maybe my great-grandkids if life blesses me in that manner. And the clear cutting never happens. The forest is never burnt down. That, again, is the Rockefeller Waterfall method. The wealth continues to flow downward, never depleting, always replenishing. This is why this is the multiplication piece that the wealthiest families continue to use. A lot of wealthy families, the ones where their estates, some of you builders out there where your estate's worth $15 or $30 million plus, they might not be using this for the small clearings. They might just be storing it as an opportunity fund. And when we look at this, we start going through and thinking through how this might look. Like I was pulling up and looking through Connor's policy earlier today, and I've talked about this before. And, every year we're adding to the system, we're capitalizing the system, and it grows stronger and stronger over time. It's very much like on page 85 where we talk about, hey, if you knew that every dollar you put into a system became more than $1, would you hesitate to put more in? Especially if you knew it was tax-free. No, right? The answer is no, you wouldn't. And so when I started looking, what does it look like? Like how much stronger is Connor's system getting over time, even when we have to do a planned cutting to make sure that it continues growing and growing back stronger, that when we go out to when he's 30 years old, we've contributed $204,000 and it has over $260,000 in the system. You go out to where he's my age, $290,000 contributed, and the cash value's over $689,000. And that's just if we do the minimum, not if we've done the extra like we've been doing at this point. It's going to be so much more valuable because every time we have more money generated, we're finding a way to add more to that particular section of our forest. And somewhere right now, you're in this story with me. You're either someone who has started it, or maybe if we look at the different generations, the 4 generations, like, are you the parent? Are you the son? Are you the grandson? Like, where are you in the generation and where are you in setting up this system? Because the only time it becomes something that you can't do is if you just decide, like, when's the best time to plant a tree? Well, it's 20 years ago, Jason, right? That's what you might have said in your head as we're having this conversation. But when's the second best time? Well, it's today. And so now and you know that first generation that starts this, and if you're able to go and put it on the generation in front of you, your parents, or even your grandparents, depending on your age, well, then that's powerful because now you've set up multiple systems, a waterfall, if you will. You've already done that by just executing the system. So here's an image I want to leave you with as we start wrapping this one up. 20 years from now, when your kids face their first major financial decision, again, maybe it's a car, maybe it's a house, maybe it's an emergency they didn't see coming. But in one version, they're doing what maybe you did, what I had to do. They're calling a bank. They're grabbing a credit card. They're looking on things and comparing what is going to give them the best return to pay someone else interest. They're asking permission. They're filling out applications. They're giving blood. They're doing all the things. And they start from scratch the same way you did. Another version, they go into their own system. The ones that's been growing since you started it. And that you've been talking about over the years. No credit check, no application, no permission required. You simply log in. You say where you want the money to go. You direct it there, and the money's sent to you. And which version happens depends entirely on what decision you make in the next 30 days. It's not pressure. It's true. And Nash opens with Proverbs 13:22. A good man leaves an inheritance for his children's children. And he closes with this. And I heard this from someone who manages billions of dollars and owns his own jet. Just the other day, as he's out playing golf barefoot, he said this exact same thing. Money won't buy happiness, but poor stewardship of money will steal it. And the stewardship starts now. If something clicked today, if the forest or the intermediate cuttings or Connor's loan or the image of your kids going to their own system, right? Your own family privatized system, instead of a bank tellers in a town that's not even where you live, wherever they landed, out of college or whatever, if that made you feel something and feel hopeful for their future, go to wealthwisebanking.com and book a call with myself or Jeremy. And we're going to meet you, as we do in every single one of these conversations, of the thousands of conversations that we've had. We're going to meet you exactly where you are. We're going to build an entire picture for your family, for your kids, your numbers, your timeline. It's never generic. It's always custom to each and every person we talk to. It's yours. And if you're still not quite there, but you want to see where your family actually stands first, still book the call. Have the conversation. Have a mirror held up so you can hear where you're at. You can see exactly where you are, because our reality is that progress equals happiness, and progress starts with an honest evaluation of where you are right now. Not where you want to be, but where are you today? As Nash said on page 71, a good man leaves an inheritance for his children's children. Today is a good day to become that man. As we always say, you're already in banking. You're just not the banker yet. Be blessed. See you next week. We'll be back intact with the two of us back in the driver's seat. Jeremy will be back from his leprechaun hunting, pot of gold hunting excursion. But as always, be blessed. Go to wealthwisebanking.com, book that call. See how today is that good day for you to be the man who sets up generational wealth for their family. Be blessed. We'll see you on the next episode.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.